Hey everybody, hope you guys are all doing well today. In this week's edition of the weekly crypto update, we have a lot to cover. To begin with, we're going to go over how Bitcoin is becoming a legal financial instrument in Germany. Next, we'll talk about how I was spot on about my prediction about insurance and coverage in the digital asset space becoming more broad and comprehensive over time. The Federal Reserve cut may seem unrelated to the digital asset space. In this video, I'll go over how this rate cut could affect not just the general market, but how it could have a collateral impact on the cryptocurrency market as well. And we'll end the video by talking about lending rates and where I think the general market is headed. With that, let's go ahead and dive into this week's crypto update. Germany recognizes Bitcoin as a legal financial instrument. German financial watchdog provides clarity on legal status of cryptocurrencies. Oftentimes, people in the crypto community, I'm talking about entrepreneurs, people that are considered luminaries, they oftentimes talk about the killer app that's going to make crypto broadly adopted amongst the general populace. In their view, that's the big bottleneck for general adoption of cryptocurrencies. My view is somewhat nuanced. I think it's the regulatory clarity that's the bottleneck, because if you want capital to pour in, I'm not talking just about money, I'm talking about intellectual capital, human capital. If you want all of that to go into the cryptocurrency space in a big and meaningful way, you're going to have to clearly define the rules for people. I'm sure people that have a higher risk tolerance will automatically flock to it. They'll see the huge potential and they'll start investing and building right away. Whether it's by design or it's by chance, a lot of people tend to have a lower risk tolerance. And in my view, to get those people into the space, the governments have to clearly define the rules. And obviously on top of that, you need some level of regulation so that way the participants play by the rule and there's legal recourse if they don't. So I think from Germany's standpoint, this is a pretty big step. I think after this, you'll see a lot of entrepreneurs in Germany get into the space, maybe open up small businesses. You might even see businesses overseas flock to Germany because now there's more legal clarity. Just take the United States, for example. Back in 2017 and even in 2018, I wouldn't call the posture that the government had, the general posture the government had, as being friendly, as being cryptocurrency friendly. And as a result, a lot of businesses that would have opened up shop here ended up going elsewhere. But now, after you've established some rules like Germany has, I think the opposite will happen. You'll see entrepreneurs and money flock to areas that are more cryptocurrency friendly. In terms of what Germany actually did, this article reads, according to the translation of BaFin's press release, published on March 2nd, cryptocurrencies are now classified as the digital representations of value that have the following characteristics. Not issued or guaranteed by any central bank or public body, don't have the legal status of currency or money, can be used by individuals or legal entities as means of exchange or payments, serve investment purposes, can be transmitted, stored, and traded electronically. The article further reads, the new classification was based on definitions written by other regulators worldwide, such as the Financial Action Task Force. BaFin also clarified that prior to this, cryptocurrencies did not fall into any of the generally recognized pre-existing categories in Germany. And truthfully, guys, I think this is just the beginning. Once these countries start to see the amount of money, the amount of human capital that starts pouring into their countries as a result of these pro-crypto regulations, I think it'll spark a regulatory arms race. Countries around the world will start softening up their laws in order to be magnets for entrepreneurs and skilled developers. And while I was editing this video, I noticed that the Supreme Court removed the RBI Bitcoin ban in India. India, if you didn't know, is the most populous country in the world. And in my view, this is just the beginning. If I end up being right in the next year or two, expect to see more headlines related to more cryptocurrency friendly laws being passed in the country of India. Next, Lloyds backs new crypto hot wallet insurance scheme from CoinCover. Insurance giant Lloyds of London is backing a new policy protecting cryptocurrencies held in online wallets against theft from hacks. And if you've watched some of my past videos, I ended up being almost prophetic. I've said it a few times. I think these insurance companies are going to offer more comprehensive insurance. They're going to broaden their terms, and eventually you'll see the prices come down. When I first heard of Lloyd's, it was in the context of insurance being provided for custody solutions. For example, BitGo is a client of Lloyd's. Under the current policy, Lloyd's covers up to $100 million worth of losses per account that BitGo has, and it only covers the cold wallets. Lloyd's is now expanding their product line to also cover hot wallets. This article reads, offering coverage with a limit starting from $1,280, the policy is designed to protect investors and traders against losses arising from the theft of crypto held online or hot wallets. Not only that, but this new type of insurance is said to have a dynamic limit that increases or decreases in line with the price changes of covered crypto assets. The fact that they're extending their product line means this legacy institution is very comfortable doing business with a digital asset-based company. And that comfort was developed over time and after they started learning about the business and understanding the space a lot more. And the next thing we'll see is we'll see more companies like Lloyd's enter into the market. And what I think you'll see next is you'll see other insurance companies get into the business. They're going to do everything they can to acquire market share. So as a result, when companies like this compete, they have to offer better products or they have to reduce prices, or they might have to do a combination of both. And as a result, I think companies like BitGo, LedgerX, all these companies that offer custody solutions for platforms like Celsius and Nexo and Crypto.com, all those custody solutions will benefit from this competition. And the downstream effect of that, we'll probably get our fees reduced and we'll probably get a variety of additional services added to the current product line. Fed cuts rates sharply in response to coronavirus risk to economy and markets. This is the first time they've done an emergency rate cut since the financial crisis of 2008. And you guys all know what happened after that. They cut the rate and the current rate is 1.25%. Unlike some other countries, the US has some more room to cut. Many other countries are at negative or zero. This rate cut was very unprecedented and it spooked the markets, and it's why we had that massive sell-off over the last few weeks. But the unique thing is that the crypto market seems to be tightly correlated with the stock market. It went down right with it. And the reason I think this happened is because a lot of the legacy players, they're using products like GBTC to gain exposure to the crypto market. I mean, if you look at the volume over the course of the last few months, it's been rising. And I think in part it explains why the price of Bitcoin went up. I mean, even if you look at ETH, they have a product called ETHE, and the volume for that has rose substantially over the last month or two. And if you look at the price of Ethereum Trust, it fell from $140 all the way down to $100 today. So I think what happened was, as a result, in part because of this rate cut and because we had a huge rally up, people are probably taking profits, and legacy investors, whenever there's some uncertainty in the markets, they like to go defensive. And by defensive, I mean they like to buy gold, they like to buy bonds. I wouldn't be surprised if moving forward, at least for a short while, we saw the markets correlate, if we saw the stock market and the crypto market move up and down in tandem. And what I think is going to happen is once this coronavirus scare goes away, hopefully around May or June-ish in the summer months, I think you'll see the equities market and you'll see the crypto market take off together. Because when these central banks are injecting liquidity into the markets, a wide variety of assets end up soaking that up. And if crypto products are now beginning to be traded side by side with the legacy products, I wouldn't be surprised if they picked up some of that liquidity that's being pumped out by the central banks. And on top of that, the relative market cap of cryptocurrencies is very low, so it won't take too much capital to send the prices shooting up. And if you wanted to learn more about what I think is going to happen to the price of Bitcoin and why it's going to happen, I strongly urge you guys to check out my past videos on coronavirus and Bitcoin. You can check those videos out by clicking the upper right hand corner of your screen. It's a 2-part series. Each video is about 10 minutes long. Not only will you learn about what I think is going to happen to Bitcoin, but you'll also learn about certain facts that the media isn't disseminating to the public. Before I talk about the change in lending rates on crypto.com, I just wanted to briefly show you guys what's happening on the Aave protocol. I noticed that every 7 days, the rate that you get for depositing synthetics tokens on the platform jumps drastically for a very cute period of time. I think I've figured out exactly what's going on, and in my next video that I'm going to be publishing probably the day after this, not only will I detail what loophole is being exploited, but I'll show you guys exactly how to exploit that loophole yourself. So if that's something you're interested in, I highly recommend that you guys check out my next video. Crypto.com reduces rates again. I mean, before we saw them reduce EOS from 8% to 6%. Now we see them drop rates all across the board for a lot of the major alts. Obviously, this doesn't make anybody happy. To be honest with you, anything north of 2 to 3% I think is pretty good, especially on deflationary assets. I've talked about the return multiplier effect when it comes to Bitcoin, but I think the same applies to a lot of these alts. In previous bull runs, all we could do is we could trade and maybe risk losing some of our tokens, or we could just hodl them. At least now we have the opportunity to earn some passive income on our tokens. For now, I'm going to keep my tokens on the platform. I mean, even at these rates, they're still pretty competitive. But if I do end up shifting tokens around, I'll make sure to let you guys know. And if that's something you're interested in, you want to follow along in how I shift tokens around, which lending platforms I use, you should definitely consider subscribing to my channel and clicking that notification bell. Whether you guys liked the video, you guys hated it, use the comment section below to express your guys' opinions. Believe it or not, I especially welcome dissenting views. I think it's key to welcome dissent if you want to have an accurate and balanced view of the world. And if you found yourself enjoying this video, do me a huge favor by smacking that like button. With that being said, this is Crypto One Step signing out. I'll talk to you folks next time. Bye.